After the 2 to 3 years of that trading range situation from mid 2020 through early 2024, gold was caught with highs all above 2,000 repeatedly, kept selling it. So we went from 2,000 up to 2,450, consolidated for several months, then shot up here recently to 2,800. Right now we're trading 2% off that high. It still hasn't had the type of behavior that it at all can be labeled excessive, spiky, emotional. And we know from consensus that, you listen out there on the internet, and most of the analysts are looking for a top still. So there are not many believers. And I strongly suspect you're going to get a massive surge in gold and its related, silver especially.
Gold prices are stabilizing this week as traders focus on two pivotal events: the U.S. presidential election and the Federal Reserve's upcoming rate decision. With a closely contested race between Kamala Harris and Donald Trump, the election's outcome will likely drive immediate market reactions, influencing gold's performance. Typically, gold gains during economic and political uncertainty, contributing to its impressive 33% gain this year as investors seek safe haven assets. However, heading into Wednesday's European session, gold faced significant selling pressure, falling to the $2,700 range, a near three-week low. Rising U.S. Treasury yields, fueled by concerns over deficit spending and a less aggressive easing approach from the Fed, have drawn investors away from gold, a non-yielding asset. Noted analyst Michael Oliver highlights that gold's breakout from a multi-year trading range, moving from 2,000 to 2,450 to 2,800, signals the potential for a new phase in its bull market. If the stock market faces corrections, he expects gold and silver to see substantial inflows as investors seek stability. The global economic landscape remains complex, with inflationary pressures and geopolitical tensions adding further layers of uncertainty. Analysts are closely watching the Fed's policy moves as potential game changers for asset classes like gold. Additionally, central banks around the world have been increasing their gold reserves, further indicating confidence in the metal as a hedge against currency volatility. Investors are also keenly observing job market data and GDP growth trends, which could further impact policy decisions and, by extension, the precious metals market. The interplay of these factors is set to make the coming weeks critical for gold's future trajectory. Following Donald Trump's declaration of victory in the 2024 election and the likely Republican sweep of the Senate and the House, U.S. stock index futures surged despite the Fed's recent tightening. Oliver asserts that the resilience of gold clearly indicates an expectation of looser monetary policy and a growing money supply, which is already beginning to accelerate. On Thursday, the Federal Reserve is expected to cut interest rates for the second time this year, just 2 months after a surprise jumbo cut in September. This dovish shift could further support gold's upward momentum, especially amid broader economic uncertainties and potential stock market volatility. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I don't think that rally will sustain this time, unlike 2000 to 2002, where bonds went up and gold went up in an ongoing way. This time, I think you'll have a spurt in bonds, but I think most of the money's going into the monetary metals because if you look at you're a portfolio manager, agnostic. You're not a gold lover, not a gold hater. You just look at what works. And you look at what the year-to-date gains have been, despite the howling from one side that, oh, it's terrible, it's going to top. Gold miners up 30% and the S&P up to 18. Somehow gold miners are up there. Nobody cares. Nobody believes it. More money will flow into that which is making money and has been persistently making money, not just this month, but overall during the year in an ongoing fashion. So it's literally an asset class movement. And we all know that the gold miners in particular and silver miners are a very tiny little sector. So if money does start to flow into them because of acknowledgement that gold is ongoing, that could be like a wet bar of soap phenomenon where everybody's grabbing it and it scoots. I suspect that's what we're going to see. But the main thing is Mama Gold. And again, as I said, after the 2 to 3 years of that trading range situation from mid 2020 through early 2024, gold was caught with highs all above 2,000 repeatedly, kept selling it. Finally, our momentum metrics said, no, it's waking up now. It's going to launch. into a different phase of the bull market. Instead of a pause phase for several years, it's going to relaunch the bull market, and it did. So we went from 2000 up to 2450, consolidated for several months, then shot up here recently to 2800. Right now we're trading 2% off that high. It still hasn't had the type of behavior that it at all can be labeled excessive, spiky, emotional. And we know from consensus that, you listen out there on the internet, and most of the analysts are looking for a top still. So there are not many believers. And I strongly suspect you're going to get a massive surge in gold and its related, silver especially, and the miners, while the stock market starts to implode. Again, I'm not talking a stock market crash at this point. I think the stock market could go down in 10% layers, as it did in 2007 through much of 2008, while gold went up during that time. So that's what I'm looking for. And I think the election could help spark that, because we're in such close proximity in the S&P right now to major breakage levels that I think that it's positioned itself to do so in consequence of the election. So you didn't have any real collapse in the stock market till later in 2008. But during all the first phase of collapse in the stock market, gold was going up, 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 up. And so it didn't matter. The main issue for gold is monetary policy. And the Fed went tight recently. That still didn't break gold. Gold knew what was coming. Now money supply growth is accelerated again, which is not being talked about much. And they've cut rates, and we know they're going to cut some more. And they'll certainly have an excuse once the stock market starts to fracture, because other market attributes will exhibit themselves, especially data points. And that's what gold lives on. It is a reflection of the decay, ongoing decay, decade by decade, in fiat currencies. And I think we're facing, probably this time around, a crisis that we've never faced before, not just with the dollar versus other currencies. That's nonsense. But in the decay of the major fiat currencies in terms of their buying power and in terms of the sense of safety and ongoing stability of the public in those countries, knowing that this thing keeps decaying. When I was a kid, a loaf of bread was 20 cents. Okay? Do we have a wheat drought? No, of course we don't. We have a monetary degradation that's been ongoing for decades, and it's accelerating again. And gold knows that. That's what fuels gold.
Analyst Michael Oliver emphasizes that gold doesn't always track the stock market. For example, gold continued to rise during the 2007 market peak, demonstrating its resilience amid economic downturns. Today, if the stock market declines, this divergence could again lead to a gold rally as investors seek stability. The World Gold Council adds that gold's correlation with stocks is nuanced. During risk-on periods when investors favor riskier assets, gold tends to align more with the stock market. However, that correlation weakens in market stress, as gold typically serves as a haven. It's important to note that correlations are dynamic and can change over time, with this observation being current as of September 2024. Historically, stocks and gold have moved in the same direction about 50% over the past 5.5 decades. However, when viewed over more extended periods, gold has diverged from equity slightly more often, diverging about 55% since 1969. This tendency to zig when equity zags underscores gold's role as a hedge, particularly in volatile markets. The broader implications for investors are significant, as holding gold can provide a form of insurance during times of economic upheaval. Central banks' purchases of gold reserves have also bolstered its value, emphasizing its strategic importance in global finance. With ongoing geopolitical tensions and uncertainties surrounding future economic policies, the interest in safe haven assets like gold is likely to persist. Analysts are also observing shifts in demand from both institutional and retail investors, further highlighting the diverse drivers of gold's performance. Such factors reinforce the case for diversifying portfolios with assets that can withstand economic turbulence. Let's get back to the interview. If you look back at the mid to late 70s, it went into commodities and gold, while the stock market was an absolute total wasteland. So, that's a category to watch closely.
In April at 40, it's now 45, 46, and a big drop, but it's still well above its entry point. But many of the miners didn't break recently. Why? Because it was peculiar to Newmont, and Newmont was 14+% of the GDX. So no wonder GDX dropped $4. It's 14% of it plus is Newmont.
Right.
But that sector, everybody seems to think it moves with the stock market, and they're making the mistake of going back, let's say, to 2015, and they overlay an S&P and they overlay the gold miners and they overlay gold, and they say, well, they've been in sync together. Well, yes, they have, but that's occurred in the past too. But then they've divorced at times where gold and the miners continue up and the stock market breaks down. Okay, so when the stock market topped in 2007, do you think the gold miners topped in and went down? No, they continued up through 2010. Yes, they topped before gold, which is probably an early warning, but they went up for several more years despite the stock market being cut in half. Okay, so don't make that mistake. They will reflect Mama Gold. Mama Gold's going up, they're going up too. And after all, again, GDX, even with the recent drop, is up 30% on the year. No, I just think that the gold market is not to be confused with stock market direction at this point. In fact, the stock market breakage is something we've been arguing for months, and it hasn't happened yet. Where gold reignited itself in March, we put out a renewed buy signal at 2100, at silver just above 25, and GDX at 31.5. That was our last major buy signal. GDX is at 40 right now, silver's 32.5. and gold's 27.50 compared to our entry levels. Don't confuse it with the stock market. It can continue while the stock market peaks. In fact, during that period in 2007, when the stock market rallied during the Fed cut, gold rallied too. So they looked like they were in total sync. And suddenly when the stock market peaked in 2008, and by the first quarter of 2007 and the first quarter of 2008, it was well off its high. Gold had continued on up sharply. So I think we're at that point again. So don't confuse the stock market with gold. In fact, we argue the breakage of the stock market is the next major refueling.
As global markets navigate heightened uncertainty, gold continues to affirm its role as a reliable hedge against economic volatility. Its inverse relationship with stocks, especially during financial stress, highlights its appeal as a safe haven asset. The ongoing shifts in monetary policy and political and economic fluctuations could further drive investors to precious metals. This enduring stability amidst fluctuating financial markets reinforces gold's relevance in diversified investment strategies. Given recent market dynamics and gold's performance, how should individual investors approach gold in their portfolios during periods of heightened economic uncertainty? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.